gold and silver haven't moved like the cryptos have yet. So we will leave that aside and focus on gold and silver today and the Putin price hike. Well, hello there, my friends. Chris Mark is here with you on Monday, April 18th, 2022. And some good news for gold and silver investors because you woke up to seeing prices slightly higher, with gold even briefly breaking the $2,000 mark as the crypto correlation crashes. So we see since the beginning of the year, gold has surged over 9%, topping $2,000 again this morning amid geopolitical crises and global stagflation fears, which we will dig into a bit today. Again, as you know, it seems Bitcoin back below 40,000 this morning. And while I know there's some people like to compare gold and silver to Bitcoin, I'm not going to do that today. I think they're different assets. And while I know people like to, some people in the gold and silver community like to do a victory lap of sorts whenever cryptos are down. Well, I think there is some sort of correlation, and certainly it's possible that some of that gold and silver money has gone into cryptos. Try and be fair, at least, gold and silver haven't moved like the cryptos have yet. So we will leave that aside and focus on gold and silver today and the Putin price hike. Exciting stuff. Here you can see the gold chart slightly ticked above $2,000 per ounce, not by a lot. We have on investing.com as of early this morning, gold at 1996, silver up 57 cents to $26.27. Perhaps what stands out to me the most about this is that this is in the face of the rising interest rates. Now, maybe the Fed's rising Fed funds target rate going at a slow pace, but here you see the 10-year up to 2.833%. Certainly the bond market reacting to what the Fed is saying they're going to do. And to the degree that now it does not always play out like this, but the basic theory that Fed prints money, then you have more dollars relative to the same supply of gold and silver. You would think based on supply and demand, price would go up when they're retracting money, cutting off the balance sheet, raising interest rates. There was ever a time where you could make the case, all right, well, you can see gold and silver sell off a bit here. Now would be that time. Although instead, for those who like the Kitco chart with its cool colors, there you can see quite a move on the open last night where came in at 1975-ish. Let's see, spikes immediately. Then a couple more spikes today. Not surprising to see it get right near or slightly above that $2,000 mark. Then get pushed down. I can only imagine if we could see the order book, what was really going on, who was buying and selling. It's a shame in some ways you don't have access to that. Only Ross the boss does, so he can keep the data private so the banks can continue to collude and spoof the price. But man, I'll bet it's quite theatrical, and we'll just do the best to pass along the clues that emerge. Yet, along with the fact that now you have interest rates higher and gold's still back at 2,000. Remember, it was about a month or so ago, gold broke through 2,000. I would suggest in response to Ukraine war, a lot of gold and silver buying, inflation prints that are above 8% on a regular basis in response to the Putin price hike, which we will dig into because that is breaking news that came out over the weekend, in the words of Joe Biden. But here it is, month later, things have only escalated. Interest rates have gone up, yet gold's still at 2,000. My guess, I can't know this, but for the same reasons that the CFTC and the banks were rightly afraid of silver breaking $30, I would have to imagine, I won't have to, but I will imagine that same type of thinking probably factors in when they see gold go over 2,000. So I don't know this for sure, but I'm guessing that some banks hammered the price down, whether the plunge protection team was involved or not. Wouldn't be surprised. Yet, despite all that, here we are a month later. It seems to me unofficially that there's logical buying pressure continuing to push the market higher, and probably just bank and regulatory pressure trying to push it lower. And we'll see how that plays out. Whether this is whether we're nearing the end point of the break point. I won't do the disservice of saying that without being able to support that, but certainly interesting times. You can see a quick look at a silver price here. So shot higher by quite a bit and then has been getting knocked back down lower. And the Kitco chart right to the $26 mark. So movement in silver as gold is again nearing its all-time high. Silver still at half of its 1980 and 2011 highs. And we will see how long it takes to change that. Although from everything I hear, physical buying has continued strong. And I think I'll check in with Andy Scheckman later this week. Also like to talk to him about the distinction between retail and institutional, because on one hand, there's one finite silver source of how much comes out of the ground or is recycled. On the other hand, it's not a very straightforward market, so we'll look forward to digging in with him on that one. Again, as you can see here on CNBC, bond yields not up a lot, but up a little bit. Of course, let's see if that phases the stock market, which usually just goes up no matter what. Here, Dow up 140 points, NASDAQ down 45, so somewhat flattish on the day. Bank of America profit tops estimates as lender releases reserves for soured loans. Now, whether they were lending out some of that silver, the last time I called the CME asking for clarity on why they were over the position limits, as well as some other banks, they just told me that, they could have a hedge exemption or they could be in violation, but the CFTC monitors that, which I'm sure leaves everybody feeling a lot safer knowing Ross the boss is on the wall. But even though you can't count on Ross or the CFTC or the SEC or any of these government agencies to do regulation or tell you what's going on, unfortunately, we do have Rafi Farber of the Endgame Investor and the Endgame Investor Weekly Silver Report on the Arcadia Silver Network here. And for the technical traders out there, I wanted to pass along this note because he mentioned the other day, silver has been bouncing off of the 50-week moving average for 7 weeks straight now. It's going to put a lot of algorithms selling around that line under a lot of pressure. Breakpoint should be somewhere between 26 and 27.50, after which we should make a beeline towards 30. Getting past 30 will be a battle, but once we get past it, I don't think we'll go back below in this monetary system. I think Rafi will be correct in that. Now, whether the beeline to 30, that's the getting past 30, when that happens, I would suggest all logic would indicate that, you would think trading wise and on the economic fundamentals. I mean, it did happen years ago. In fact, it happened in 2011. It happened in 2021. But living in a price intervention world, came back down, and we'll see how that goes. From everything I'm hearing and the conversations I have, I mean, one can't know such a thing officially, but I continue to get the feeling that 30 is very much the line in the sand. And once it goes past that, we could be well into a new world economic environment. And we'll keep you posted as I learn more. But one reason to hit the subscribe button and the notification bell. Now, here you see France has repatriated all of its monetary gold. Covertly repatriated 221 tons between 2013 and 2016. Since then, all its monetary gold is stored in La Souterraine in Paris. Now, that's something that we won't dig into this whole article, but doesn't get mentioned much of why all these countries were repatriating their gold. Started back in 2013 when the Germans asked for their gold back. The Fed said, we'll give you 10% over 7 years. A Fort Knox-like confidence-inspiring statement. Never any further explanation on that. And I hear things of why some of the gold may be repatriated. Nothing I can cite officially, but certainly doesn't give you the feeling that everyone's sitting around there thinking, all right, well, this Fed's got things under control. We can trust them. And we'll keep an eye on that one. Although, further news, here you see NATO plans military buildup on Russia's border, citing major reset. Interesting choice of language. And again, I won't claim to be an expert on the Ukraine-Russia war today, except that everything I'm reading seems to indicate that it's not in any way wrapping up smoothly in a couple of days, like I guess had been suggested by some of the media initially. I believe it was Anthony Blinken of the U.S. State Department saying that he sees it going well into 2022. And then you see NATO plans massive military buildup on the Russian border, which does not suggest that either side is yet ready to back down. So again, just sending prayers for everyone involved to be as safe as possible and figuring things out. Again, that's part of the reason why I did leave the US and am in Mexico now, not to say the situation is the same. And here, now as promised, we have Joe Biden not only calling the war in Ukraine a genocide, but announcing the Putin price hike. So without further ado, let's get right into this one and hear what he had to say.
I'm doing everything within my power by executive orders to bring down the price and address the Putin price hike. In fact, we've already made progress since March inflation data was collected. Your family budget, your ability to fill up your tank, none of it should hinge on whether a dictator declares war and commits genocide in a half a world away.
Which I'll try and leave my thoughts on the political nature of that aside, but let's hear part of this again.
I'm doing everything within my power by executive orders to bring.
He's doing everything in his power by executive orders to bring prices down. Unfortunately, prices don't come down due to executive orders. They come down if you stop printing money, which doesn't seem to be anywhere in the plans. So he can call it Putin's price hike, Merkel's boner, you know, the Red Sparrow, whatever he wants. I think it's unfortunate that he's lying to his people, or I don't know if he actually believes that stuff, but if you're expecting prices to come down due to some executive order, I'd suggest you go back to where he said before that he had it under control. Then a couple of weeks later, hey, nothing I can do. Putin's fault, Putin's price hike, and watch out for food shortages. So we hope someone aside from Joe is doing something behind the scenes to avert what seems like is shaping up to be a not ideal situation, but I'm not sure if that is actually happening. So again, good time to take matters into your own hands and make sure that you're prepared for Putin's price hike and Joe Biden's response. And here we have another story. Hold on, another story, same story. Because here you see the dotted line is Putin's invasion, where the Putin price hike was implemented, sending prices soaring. Oops, just kidding. That's Biden's inauguration. And what he didn't mention in explaining the Putin price hike is why inflation prints were already soaring well before we haven't even heard of the Putin price hike, let alone the Ukraine invasion of 2022. So again, you can Joe Biden can talk about executive orders all he wants, and I wouldn't hitch my wagon to that safety raft. Wow, mixing some analogies there on a Monday morning, but anyway, wrapping up two more quick stories here, because we see U.S. blames Russia for Yemen hunger crisis, praises Saudi role. I heard things aren't going that well in Yemen either. A lot of places where there's military conflict that the U.S. is not protecting anyone against yet. Here we see, if you really want to help the world avoid a food crisis, you should lift the sanctions that you yourselves imposed. Your sanctions of choice indeed, and poor countries will immediately feel the difference. Seems like those sanctions are going to make Americans feel the difference, at least according to the reports I'm seeing this summer. And again, all just very unfortunate, and perhaps best to leave that at there and mention that I would like to thank First Majestic, who brought us today's video, largest primary silver producer. I guess different ways of measuring largest, but one of the largest primary silver producers. I know I got in trouble with that one before. And here you see they produced 7.2 million silver equivalent ounces in the first quarter, consisting of 2.6 million ounces of silver and almost 59,000 ounces of gold. Now, one thing that I thought was interesting here you see reached the 7.2 million equivalent ounces, but consisting of only 2.6 million ounces of silver. something that's popped into my head. One of the reasons why there's going to be demand for silver, especially with all the silver that goes into military equipment, you need silver there. And I just point this out because here, if you average that out, let's say it was 10 million actual ounces of silver, because here they're giving you the silver equivalent ounces to show their gold production as well. But in terms of industrial applications that just require silver, here's First Majestic of the, where I don't know, leaving aside companies that are going after zinc or copper or lead and producing silver as a byproduct, which is about 70 or 80% of the market. But here, in terms of you're saying, all right, hey, Keith Newmeyer, go out, get a couple new projects. It's not like they're cranking out 100 million ounces of silver a year. And I mean, hey, if the price goes up, they'll just pile on another 50. I mean, this is a pace of about 10 million ounces a year where they're already going at it pretty hard. So just an interesting dynamic in the silver market, and the link to read about all the details of first quarter highlights for First Majestic is in the description field below. So now that we're wrapping up, you can go click on that, find out more about First Majestic, what they're up to, see if that is a suitable investment. You can also have your financial advisor check in, have the contact tab up here. And with that said, again, I'd like to thank Keith Newmeyer for being the opposite of a Ross Benham-like presence in the market. And I do have a video, I've been working on that, comparing Ross Benham, some of his comments of how he protects certain groups and how Keith felt about that. Very interesting stuff, and that will be coming soon. But with that said, I'm going to wrap up for today. Hope your week is off to a great start. That is the silver news and gold news and Putin price hike news. And with that said, I will see you again tomorrow.